Hello everyone. Rule number 8 of the EnDo Strategy is about how to identify when an uptrend begins after a downtrend has ended. Let's assume the market is already in a downtrend. Although we open long positions only on the nasdaq 100, during such periods, we observe both the nasdaq 100 and the S&P 500. This is because, despite being different indices, they reflect the same overall US equity market sentiment. On the weekly chart, when price breaks above the most recent lower high that formed after a decline from an upward move, and the weekly candle closes above that level with its body, we consider this the start of an uptrend. At that point, we close all open short positions and prepare to open long positions. This is because throughout the entire historical data for both the S&P 500 and the nasdaq 100, every downtrend has transitioned into an uptrend in this exact way. However, there is another way to identify the end of a downtrend, although it occurs very rarely. First, on the weekly chart, we check whether the downtrend has formed 5 or more wave movements during the decline. A decline consisting of 5 or more waves indicates that selling momentum has weakened and reached exhaustion. Next, we switch to the monthly chart. On the monthly chart, the area from the bottom of the wick of the monthly candle at the higher low preceding the most recent low, up to the level reached by the body of the nearest monthly candle, is defined as a support zone. If the monthly candle immediately following the bearish candle that broke below this support zone closes back above the support zone and fully recovers the entire decline of the previous candle that moved below the support, this confirms that the support zone is strong. In this case, we consider it highly likely that the downtrend has become exhausted and ended. After this, we close any open short positions and wait for the uptrend to be fully confirmed on the weekly chart. Thank you for watching. If you found this helpful, please like the video and subscribe to the channel.